Supply and demand zones are where real trading power lies. These areas often mark where institutions step in, driving price reversals or launching major trends, but spotting them manually, time-consuming, inconsistent, and prone to bias. That's where automation comes in. Today, we're breaking down how to automate a supply and demand trading strategy inside MetaTrader 5 using MQL5, so your system can find, confirm, and execute trades on your behalf. This is Fintech Bot Focused, where we discuss, dissect, and implement all things automated trading. If you're into bots, AI, and strategy automation, make sure you're subscribed. Step 1, understanding the supply and demand model. Here's the core idea. Demand zones form when strong buying pushes prices upward. Supply zones form when heavy selling drives prices down. When price later returns to one of these zones, there's often a strong reaction, either frukitis inoas tiroachendis trachavas inoastis, either a bounce or full reversal. The goal: automate how your bot identifies those zones, confirms a valid retest, and executes trades without hesitation. Step 2, automatically identifying zones. In MQL5, your bot can scan historical price data to detect consolidation ranges, areas where price moves sideways before breaking out. Once it detects a sharp impulse move away from that range, it marks that area as a potential supply or demand zone. You can fine-tune detection parameters like candle count in the consolidation, strength of the impulse, and how far back the bot scans for zones. Step 3, confirming the retest and impulse. Once price revisits a marked zone, your bot checks for confirmation. That can include trend alignment, optional filter using moving averages, momentum strength during retest, impulse validation, confirming that price reacted with force. If all rules align, the bot executes automatically. Buy at demand zones when price confirms bullish pressure. Sell at supply zones when sellers reclaim control. Stop loss and take profit can be based on the zone size or a predefined risk ratio like 1.2 or 1.3. With MQL5's trade library, you can script fully automated entries, exits, and position management. Your code can also include limits on how many times a zone can be traded, rules to skip broken zones, trend or volatility filters to trade only in high probability setups. This is how professional grade bots maintain discipline, 100% rule-based execution. Before going live, always backtest using MetaTrader 5's strategy tester. Adjust zone detection sensitivity. Tune your impulse strength thresholds. Track win rate and drawdown across multiple markets. Then forward test in paper trading mode to ensure real-time reliability before risking capital. Even automated strategies have risk. Market conditions change, volatility spikes, and false signals happen. Results vary. Always trade at your own risk, and remember that automation enforces discipline but doesn't guarantee profits. By automating a supply and demand system, you remove emotion, gain consistency, and let your bot handle what humans often miss: speed and precision. Once your detection, confirmation, and execution rules are coded, your trading system becomes a disciplined engine running around the clock. That's the future of smart price action-based automation. Have you tried automating supply and demand trading yet? Do you prefer manual charting, or do you trust algorithms to find the best zones? Drop your thoughts in the comments. I'd love to hear your experiences. And if this helped, hit like and subscribe to Fintech Bot Focus for more deep dives into trading bots, AI tools, and real-world automation setups.